So, when is it more expensive for one than it is for two?
Probably more often than you would think,
More
Cary.
often than you would think, right?
Yeah.
So, today we're talking about the silent tax penalty, how living alone can cost you more. So, if you're single, divorced, widowed, or just living alone, this video is really for you because the financial systems that we live in are largely designed for couples.
Right.
And that can leave solo households at a disadvantage.
Absolutely.
So I'm Cary Smith and I'm with Client First Capital. I'm sitting here with Cheri Turner, who's also with the firm.
Hmm.
And so Cheri, I'm looking forward to this topic. You're a specialist in this area, so I know you're going to bring in some good context around this. But I know we're going to talk about just the cost of going solo, how how the expenses can be different, also some of the tax code realities.
Right.
But the good news is there's things you can do about it to help
Absolutely.
offset some of these. I'm going to throughout this video probably use the word use the word penalties, right, in a very loose sense. But before we get started, I also want to acknowledge. So we do these videos often, and I'm in a new office, and I feel like I'm so close to the camera, and you're where you always are, but it seems like you're further back. I'll scoot back a little bit just to put us a little more on par. But I'm looking forward to our discussion today.
I like your new background there, Cary, but I do miss the guitars a little bit.
You missed the guitars. They're still close by.
Okay.
All right, so Cheri, why don't you get us started with just the cost of going solo?
Right. Absolutely. So if you're living alone, you're probably paying more than you think, not just in rent or groceries, but in taxes and healthcare and even in missed benefits. It's called the silent tax penalty, and it hits solo households harder than most people realize. So let's start with the basics. Life costs more when you're the only one paying for it. When you think about your housing, whether you rent or you own, you're paying 100% of the cost because there's no one to split the mortgage, the utilities, or the internet bills with. When you think about food and groceries, a solo shopper ends up spending more per person because you can't buy things in bulk the way you do when you're a couple or a family. And even travel. Have you ever heard of the single supplement? Many cruises and tours charge more if you're not sharing a room with someone. And then we don't want to forget about what we call the time costs. And that's that you can't divide tasks. Everything from managing the finances to maintaining the entire household falls fully on your shoulders. So these hidden costs really do add up.
They do, and some of these costs we don't often, stop and think about, Cherie, and if you go on a cruise, right,
Mhm.
um, the room, if you're one person, is not necessarily half of what it would be if it were two people. It can be a little bit more. And I
Right.
totally understand the math behind it from the cruise line or wherever you're getting this experience, right? Because if there's two people in the room, there's two people eating in the restaurant, and two people, right? There's two people spending money everywhere you go,
Right.
and so I understand the math, but that doesn't make it feel better if you're paying a little bit more as a single person.
Absolutely. Absolutely.
So let's talk about some of the so those are just some of the societal things that can cause us to pay a little bit more if we're single. What about some of the tax codes or other things of that nature?
Right. So when it comes to taxes, the IRS isn't exactly kind to solo earners. When you think about filing status, if you're single, your tax brackets are much narrower than those filing jointly. You hit the higher tax rates much faster, even though your household only has one income that truly has to stretch even farther. Even with your standard deductions, single filers get about half the standard deduction of a married couple, but that doesn't mean that your expenses are half. And even when it comes to credits and deductions, some tax benefits actually phase out much faster for singles, things like the child tax credit or lifetime learning credit. You also have considerations around things like the Medicare IRMA surcharges. The income threshold for premium surcharges is half for single filers. And then also even Social Security. You don't have spousal benefits or survivor benefits to fall back on unless you were previously married. So being single means not only paying more, but often receiving less.
I would think couples would probably say, well, the IRS isn't necessarily nice to us.
True,
They're
true.
just they're just even less nice if you're single. But really good points. Tax brackets lower if you're single, tax deductions lower. So it's just it does feel like we're being penalized. So what are some of the things that we can do about it?
Sure. There are several different tax smart strategies that you can enact. One being considering Roth conversions in the low income years to help you avoid that single filer tax pinch later in life when you don't have an active income. You can bunch your deductions or use donor advised funds to really maximize your charitable giving benefits. Things like utilizing QCDs or qualified charitable distributions in your RMD years, because your required minimum distributions can be used for charitable distributions and become non-taxable. Taking advantage of things like tax loss harvesting opportunities, as well as asset location strategies, meaning that you put your taxable type investments into specific accounts that help keep your taxes low, and by putting your higher growing investments into those tax-free accounts. You can also maximize your HSA contributions so that you have those funds to utilize later. And then also you can do solo 401ks or SEP IRAs if you are either self-employed or have any side income.
Okay. So a lot of those things that you just mentioned, Cheri, so those are available for couples as well.
True.
So they're not unique to just for single people. But I think to your point, they might be even more important if you're single because of the penalties that you're paying elsewhere. These tax strategies and charitable giving strategies and financial planning strategies might be even more important for you.
Exactly. Yes. There are some other things that you can do aside from those tax strategies, things like creative living arrangements, such as considering renting out a room or renting out a room in either your house or condo, buying a multi-unit property, so say an apartment building to where you can live in one of the units, but rent the others out, or something like a duplex. And then even considering potentially converting part of your home to an ADU, something that could be used as an Airbnb or something like that for additional income. VRBO is another one of those. And that sort of offers more flexibility and a potentially higher income than long-term rental opportunities.
And there's, some of those opportunities might be quite lucrative. Just given the housing market today and people looking for housing and depending on where you're living, right? If you're renting some space out, actually could be a decent amount of income.
Right, exactly.
Yeah.
Exactly.
Okay.
Another important thing that you can do is to build a solo safety net. So things like ensuring that your emergency fund, that you have a 6-month minimum, ensuring that you're covered by disability insurance. It's even more critical because there is no backup income to fall back on. And then also don't forget to invest in your community. Connection and support are just as important as spreadsheets and savings accounts in this kind of a situation.
Yeah, often you'll hear people say your emergency account needs to be 3 to 6 months of expenses.
Right.
But you know that one of the reasons it's a range is if you're married, 3 months might be enough because there might be another income or the potential of more income coming in. But if you're single, it needs to be closer to that 6 months or at 6 months because you don't have that backup.
Right.
Okay.
And then also your estate planning essentials. As a single or solo individual, these become even more important. Ensuring that you have your healthcare proxy or medical power of attorney. If you're in a medical emergency and you're unable to make these decisions, someone needs to have the legal authority to act on your behalf. So without this document, doctors may defer the decisions to the courts, which could either delay the decisions or end up having those decisions made by someone that wouldn't be someone you would have chosen.
Yeah. So if you're married, a lot of times these decisions will just fall to your spouse.
Right.
But if you're single, it's more important to make sure you have your documents in place and
Yeah.
that those decisions are made by the person that you would want making those decisions, which typically that person is going to also be aware of your wishes and what you would want to happen.
Right, exactly. And
Okay.
along with that would also be your living will or advance directive, which very much more specifies your medical treatment preferences, such as you want life support, resuscitation, feeding tubes, even down to the pain management. So ensuring that you have that and that individual knows what it is that you would want as well. Also, your financial power of attorney. If you should become incapacitated, who's going to pay your bills, manage your investments, and handle your business affairs? Without this financial power of attorney, no one, including your family, can legally act on your behalf without first going through the courts.
That's right.
Yeah.
Okay. Cheri, you've hit a lot of really good points here. Any final thoughts before we wrap up?
I'll touch on it a little bit. I know that we've talked about it in many previous ones, but also your will or trust, ensuring that you have your overall wishes specified in writing and that those documents are in place so that it's not the courts deciding what's going to happen with your assets, but exactly what your intentions are.
Very good. We do talk about that a lot. And it's one of those things, so many people put it off.
Yes.
It doesn't take a lot of time. It's not very painful. Once you've done it, it's done, right? Not that it'll never need to be revisited. And it's such a peace of mind when you get that done.
Absolutely.
So if you've not done that, single or married, you should make sure you get that done.
Right.
Okay. Well, if you're watching this video and you are married and you think maybe your spouse spends a little too much, cut them some slack because they're protecting you from the singles penalty, right? So they might be saving you more money than you realize. And but if you're single, there's some really good points in here that can help you be successful financially. And so Cheri, you made several good points here. So I want to thank you for watching. If you're watching this video and you found it helpful, please give it a like. It helps more people like you find our content. If you're planning for retirement or just want a second opinion on your strategy, we'd love to help. Head over to our website at Client First Cap to learn more or to schedule a free financial consultation with someone on our team. Don't forget to check out our other videos for more retirement planning insights, tax strategies, and smart investing tips. And we're here to help protect you and grow what you've worked so hard to accomplish. We'll see you in the next video. Thank you.
Thanks, Cary.
Bye.